Hello and welcome to Insta TV. You're watching daily financial news with me, Anna Kasatkina. Yesterday there was a sudden stock market crash on Wall Street as US stock indices plummeted to November values in a flash. Experts do not see clear-cut catalyst for the sell-off, which looked like a panic among investors. Dow Jones Industrial Average shed almost 1,200 points or 4.6% to trade next to 24,340 by the end of the North American session. S&P 500 tumbled 5% and Nasdaq Composite dropped nearly 4%. The trend for a decline appeared on Friday following non-farm payrolls from the U.S. Labor Department. Better than expected figures clearly indicated the scenario of several rate hikes this year. Stepping down as the Fed chair, Janet Yellen noted that the bubble in the U.S. stock market is about to burst. Her comments dulled the appetite for risk. As a result, safe haven assets such as the yen and franc found support from the risk-aversion sentiment. The dollar-yen pair opened the Asian trade close to 108.60. Now the pair is making correctional moves. However, analysts say the pair is unlikely to resume the upward trend in the short term. Risk aversion is also revealed in the Australian versus the US dollar pair, which weakened by over 0.35%. Having reached 0.7840, the pair is making a minor upward correction. The Australian dollar will hardly be able to regain losses in light of policy decisions of the Reserve Bank of Australia and a downbeat report on retail sales. Australia's central bank kept the stance of monetary policy unchanged. Besides, Governor Philip Lowe hinted that the domestic economy is not ready for monetary tightening. The board of the central bank thinks that the economy benefits from low interest rates. The board pointed out the outlook for consumer activity as the main source for uncertainty. Australia's retail sales fell 0.5% in December on a monthly basis. Besides, investors are discouraged with the fact that Australia's trade balance shifted to deficit in December that posted the worst figure since August 2016. The deficit, led by a big surge in imports, confounds expectations for a surplus. To sum up, the Australian dollar is expected to go on with a decline against the American counterpart. However, the yen is unlikely to stand the pressure as today the US is due to release a report on job openings. That's all for now. Thank you for watching and stay tuned.